Good evening, punk rock traders. This is Robb here from Southern California. You can see we've got a beautiful sunset behind us. Nice to see you this evening. We've had a really great week in trading. We've had an auspicious start to earnings season, and I want to go through a controversial topic that shouldn't be controversial, so I don't want anybody to get upset about what we're talking about. We're talking about how the stock market can predict elections. Now, any historical data is only going to infer something. It's never going to say something's going to happen for sure. But we do have a large body of historical evidence suggesting that stock market performance does have a bearing on who wins the presidential election. So we'll go into that. But before that, I want to go into how the stock market affects volatility, because it's pretty interesting and it's also pretty predictable. A lot of the trades we try to implement here at Punk Rock Traders are trades that we can implement over and over again. One of them, for example, that we'll be talking about today is the variance premium. We got killed on some VIX shorts because realized volatility exceeded implied volatility for the past few weeks. And we think that that's a condition that's about to change, particularly with the election. Elections tend to have a lot of elevated volatility around them due to the uncertainty of events. But once they pass, there tends to be what's called a volatility crush. Now, we played the election on the upside with this VIX contract right here. And as you can see, our VIX contract expired 99% in the money. Now, that was riding the volatility of the election on the way up. As you can see here, this was a couple weeks ago around when we recommended this options contract, and you can see there's a hump around the election. That is the hump that we were taking advantage of when we bought the $16 VIX call. So now I want to show you what the curve currently looks like. We basically passed the volatility puppy through the python. Let me explain why. The volatility index is a calculation that uses inputs of SPX options, right? That's options on the S&P 500. So it uses out of the money options of a range of 23 to 37 days to get that 30-day number that we see in the headline. Now, because the election is less than 23 days away, the contracts closest to the election are no longer being considered in the headline VIX calculation. That was our third reason why we speculated on Tuesday that the VIX was going to collapse. It did indeed collapse, and we think the fact that on October 16th, those election contracts were phased out of the calculation was a major reason why. So to capitalize on the downside, we have a contract that we recommended way back in August, and as you can see, the contract has been holding steady, but we think after the post-election volatility crush, it's going to really sing. So if you're a member or a subscriber of Punk Rock Traders, be sure to go back and look at this contract. This is an example of how implied volatility tends to exceed realized volatility in the case of elections. If you'll remember this French election where there were a lot of fears of a far-right sweep, you can see that the curve inverted, and then the week after, the curve disinverted and became normalized, similar to what's happening with our own volatility index here. The V-Stoxx is the European VIX. So here's one of the areas where the stock market has been pretty predictive over time, right? If the stock market is doing good in the run-up to an election, the incumbent party tends to win. If the stock market is doing less well, then the challenger tends to win. And you can see 1 year prior is the biggest discrepancy. But if the stock market is negative in the months leading up to the election, the challenger party is more likely to win. The rule's been predictive since 1928 in every election except for 1956, 1968, and 1980. So when you see the prediction markets and you say, oh my gosh, this is a definitive answer, we're going to talk about why we don't think that's the case. And we're also going to make the contention that the stock market strength so far leading up to this election suggests that the incumbent or Kamala Harris will win. Okay, here's another stock market observation that we can surmise might be the case if the incumbent or the challenger wins. And it is a bit confusing because we have had a lot of volatility in August. We had one of the biggest big spikes in history. But 2024, before that event, was a pretty tame year in terms of volatility. We had a lot of volatility in the teens and lower even sometimes. So if volatility is elevated in any of these time periods prior to the election, the challenger is more likely to win. If it's elevated a year after, that is also the case when the challenger wins, right? So if there's elevated volatility before the election, the challenger is likelier to win, right? If the volatility is subdued, the incumbent party is likely to win. And what does it mean after either Donald Trump or Kamala Harris wins? You can see here that in 3 months after, 6 months after, 9 months after, 1 year after, the volatility was all elevated when the incumbent party lost. Okay, so let's talk about those prediction markets everyone's talking about, because I think if you really know markets, you realize why this is not a definitive answer and why these prediction markets do have value. But if you do have whales, as we'll call them, participating in bad faith, then a lot of the predictive value is lost. Because one of the reasons the price is such a powerful indicator and markets send such a powerful signal is because, when people are acting in their own self-interest economically, it tends to send a very powerful message, sometimes a more clear and powerful message than other forms of data can send, right? Not all the time, but sometimes. However, if those market participants are in bad faith, if people are acting with insider information or with intentions that don't necessarily have to do with their economic well-being, then the predictive power of these markets is somewhat tainted, in my opinion. And I think if you really understand markets, that makes perfect sense. You can even see what happens with the different types of contracts we recommend, right? We just did a great trade on TSM. Those are very liquid option markets with very small ask-bid spreads, right? But when you have less liquid markets or less developed markets with less participants, the price can be more volatile and, certain transactions can cause big swings. So both the Wall Street Journal and the Financial Times did some good reporting on this, and they have found evidence that there's potential manipulation going on. And frankly, the volatility of these numbers would lend credence to that assertion. Basically, there's about $30 million worth of bets, which is big volume for a $2 billion market comprised of mostly small bettors. It looks like 4 accounts have systematically placed frequent wagers on Trump, right? And that doesn't in itself suggest anything wrong, but it could be evidence of manipulation. And if it is manipulation, it taints the predictive value. You could see here, I think this is a pretty compelling graph to suggest that, the predictive nature of this is being compromised by some whale transactions rather than potentially Donald Trump's true odds of winning the election. You can see here the volume of buy orders for the 4 largest accounts have really been the primary driver of the rise of the Trump odds. So there's a few reasons why I think you can take the polls with a grain of salt that say that Trump is winning. And, this is not to cast dispersion on candidate Trump or candidate Harris. This is really because we have 2 stock lists. We have one stock list for Harris victory, one stock list for Trump victory. Right now, the consensus is becoming that Trump is going to win this election. I think for a few reasons that Trump may lose the election a lot worse than current polls indicate. Now, excess death rates for Republican and Democratic registered voters in Florida and Ohio, I don't want this to be a charged piece of data. I'm not trying to imply any causality here, but one of the things that I know a lot of political polls they don't go to the level of sophistication where they're going to incorporate the largest mass casualty event in modern U.S. history into their polling outcomes, right? When you have states being decided by tens of thousands of votes, the fact that 1 million Americans died of COVID most of them between the last election and now, is a pretty significant fact that I think a lot of people are failing to incorporate into their polls. This New York Times article had a very interesting argument about how one polling decision is leading to two distinct stories of the election. Now, here's the thing. If you think about it, 2020 was the most anomalous election of our lifetimes. It had the highest turnout since the early 20th century, and there were obviously a lot of factors that motivated a lot of people to vote that normally wouldn't have voted. So when you have a model tilting everything toward 2020, I don't think that's the best outcome. And I think it's kind of a lazy polling decision that is largely based on using the recall vote. And pollsters hate using the recall vote. I'll show you why. When you use the recall vote, it has been less accurate in previous elections. Now, because of increased polarization, it appears to be getting more accurate, but that doesn't mean it's the best way to account for bad polling. The bad polling is really just a reflection of human behavior changing so much and so few people using landlines. There might be someone with 3 or 4 area codes attached to their voting record. So it's just very hard to poll people. Donald Trump has thrown a wrench in a lot of it because he's such a unique candidate. It also compromises a lot of the polling because he's the first ex-president to rerun in modern history. So that may complicate some of the polling as well. So that is to say, we're not pure polling experts, but we did do a lot of analysis during COVID, and we did think that this was a relevant point to bring up. There's some other reasons why Kamala Harris may be doing a little better in some of the swing states that have to do with organization. But then again, that can be kind of a red herring. So all in all, this election is very close. The stock market being so strong leading into it would suggest that Kamala Harris should win. The prediction markets appear to be compromised, and our stock lists are very good ways to check out based on whether Donald Trump wins or whether Kamala Harris wins. And I'll show you our stock list real quick because it's kind of cool. We show performance of our stocks compared to various events, right? You can see the performance of Palantir, for example, which is on one of our stock lists. And you can see that since the presidential debate. You can see a few milestones in the election and how the stock has performed since. And of course, with all our stock lists, we have some good justification and articles giving you our thinking of why we picked the stocks. We can't thank you enough for being a subscriber to Punk Rock Traders. If you're not a subscriber to Punk Rock Traders, we hope you'll join. And thanks. Have a great night.